Welcome, everybody. We're starting a new series called The Captain's Log. And The Captain's Log is where we get to talk to Mike Venuto, who is our ETF Think Tank captain, CIO, co-founder of Tidal and ETF Think Tank. And we get to pick his brain about everything related to the ETF industry. So welcome to the best series we've launched in a long time. Good morning, Mike.
Thanks for sucking up so well on our first episode.
Yeah.
I am excited about this because we've tried things in the past like this, and we've always gotten busy, and then they don't get the love that they need. And I love that you're here to help me get our message out. And we have a lot of great thinkers here. You, Ryan, Weisskopf, Gaia, Guy, Santiago, like the list goes on and on. But as the co-founder and CIO, I kind of get to set the big picture, and you guys get to get into all the weeds, like Ryan and Dan when working on blockchain, or David Jacansky when working on, the gig economy kinds of stuff. So I like to set the big picture, and the team gets into the weeds. I don't get to get into the weeds as much anymore. So
well, what I thought would be cool, so the ETF Think Tanks are all sorts of interesting things that actually are not necessarily widely known, as we've discovered. Yeah. So I thought, let's talk about the ETF models business, which it may surprise many, surprised me when I first joined, that the ETF Think Tank actually has ETF models, and some of them are more than 10 years old. They've been around for a while, and I think they may be one of our best kept secrets. So you've been there, you've built these models, so it would be cool to talk about what this is all about. So maybe we start there. Why do we even have ETF models? What's the importance of an ETF model, or the benefit to us as providers of these models, and the benefit to an investor to consider investing with one of our models?
Yeah, so it's funny, models are really part of our origin story, right? The original iteration of Tidal was called Taroso, and it was created in partnership with the folks at Global X, and it was created when I left Horizon Kinetics, where I kind of oversaw their private client group and did a bunch of models, right? I started building ETF models all the way back in 2008 when, all of a sudden the world was collapsing and you had to do something other than just buy 15 stocks like we did in those days at that company. I actually started a model. First one I ever built using ETFs was a model using TIPS ETFs and writing calls against them in 2008. And then I started to add in closed-end funds and other income-oriented ETFs, and that's kind of where the concepts started to come together. Fast forward to 2012, I had become infatuated with the idea of the permanent portfolio, right? It was a mutual fund that's been around forever. It's a lot of interesting stories behind it. A lot of the theory behind it became the basis for how risk parity starts. And it had been done solely as a mutual fund. And I'm like, wait, you could basically build a better version of this with ETFs and then put it into an ETF. And so it's kind of how it all came together. Was I wanted to build a model around that permanent concept. And Global X at the exact same time wanted to build an ETF of the permanent fund. And that's why we kind of actually partnered to start this original firm. Now, that was 2012. By 2014, all the ETF model providers that were well known had blown up. Windhaven got acquired by Schwab, and kind of Gino went off. It just wasn't the same. And Good Harbor, anybody remembers that story?
Yeah.
Call it Icarus, right? And F Squared turns out was, run by a 12-year-old boy who now is an amazing genius, or their investment strategy was run by a 12-year-old boy who's now on our Tidal platform, has his own ETF, the Return Stack with Corey Hofstein. But, the CEO, Corey, did everything right. The CEO did not.
Right.
So
ended up in the police blotter.
Yeah. So all the love and growth of the, call it, ETF strategists and ETF model providers basically died the day we got into the business, and it wasn't our fault. So there was this, call it, over the years, Guy and I looked at it and said, all this IP, and there's a ton of IP. We're going to show some of it later, but the software, the tools, the people behind the ETF Think Tank always was there supporting these models, but we put them in what I would call incubation mode, right? We said, the market's not looking for this stuff right now. Market doesn't want to pay for this stuff right now, right? So let's put it over here. And we spent the next 10 years really using all that IP, all that content to help others launch and grow ETFs. And that's been our core business. To that end, though, now that we're there, now that we have this amazing title platform with close to 80 ETFs, none of which are title ETFs, they're all ETFs that we participate in and support. And a lot of them are ones that we've built with our clients to fit into models. Now the idea is to say, okay, this 10 years of history, track record, IP, content, we want to bring it back out to the surface. We want to do it for free because we can do that now, right? One of the reasons a lot of these model providers disappeared was because BlackRock showed up and said, here's a free model. Hell, I helped build it at Global X, and John Mayer has done a great job taking it to the next level. Wisdom Tree has like 18 people that work on our free models. Han, our counterparts in Europe, just announced the whole model thing. I think we're unique in that we've got the track records, we've helped develop the product, and we can offer free models where none of the products look like they're from the same provider. Because they're not. They're all from different IPs. They're from the brains of the folks at SoFi, or the brains of the folks at Gotham, or the brains of the folks at Evoke, or Maya at Social Justice, or like we have just such a breadth of product to choose from. And we don't have to choose only our stuff, right? I'm not gonna force beta, right? Like if beta's free, I'm gonna get beta for free. Oh, but by the way, we're the ones to help SoFi launch the first ever zero fee fund. So we even have free beta to stick in there. So to me, it's an exciting time. I probably answered 18 questions at once. And
yeah, the show is over. Thanks for joining us. No, but I wanted to ask just before we dive, because I know we're going to pull up and show some of these things. But, why is it that it didn't work in its first iteration? Was it because of cost? And when you get somebody like a BlackRock steps in and offers for free, everybody else who is, smaller can't compete? Or is it because it was models were at the wrong time, at the wrong place? Or is it because models didn't actually solve an investor problem in a way that they were willing to pay for it? And if that was it, then what's different now? Why are we bringing them back out now?
Yeah, so that's a great question. So I think that our first iteration of it failed for, I'm going to use a less of a mean word than failed. Didn't garner
industry-wide speaking, not ours necessarily. We're talking like the ETF industry. Why didn't they stick right initially?
Yeah, so you come from a big firm, right? Like I was at Horizon Kinetics. We were on Credit Suisse's platform. Oh, that doesn't even exist anymore. We're Morgan Stanley's platform. We're on Fidelity's platform. We're on all this. We had, in the SMAs, $3 or $4 billion or whatever. And I'm thinking, okay, all those friends are going to say, sure, Mike, now that you started your own firm, we're going to still work with you. And none of them did. They all said, I'll take them. They all gave me the meeting. Right. They're all very polite, and they gave us the meeting, and they said,